Hello guys, welcome to the Trading Parrot. I can clearly see how the market is reacting to the expectation of the ETF approval. We just recently had a massive fake out to the upside, followed by a dump to the downside. In today's video, we are going to do an important follow-up that might reveal some pieces of the puzzle that are starting to move and that might give us some early indication of what could come next for Bitcoin. We're going to cover a combination of technicals with on-chain data. We'll look into the Big Whale Explorer, one of my favorite charts, which is the big boss of the bear/bull market. And of course, we're going to cover the CPR and the RSI. Today, I'll do a special because I'm going to cover not just the 4-hour, but I'm going to reveal some things that are currently going on the daily and on the weekly, which might give you the golden entry if it ends up playing out. We'll also cover what's going on with the open interest. There's an extreme bias at the moment, so it's very important to keep an eye. Not to mention that the network value transaction is hitting a level which we have hit 3 times in the past, and it has indicated a very clear direction in the market, at least for the span of the next 1 or 2 months. We will recognize where is the liquidity currently located, and I'm going to end up with this magnificent chart of Fibonacci levels of more than 1 year in the past. So get comfy, because among all this information, I'm sure you're gonna find lots of things that are very useful for your trading. Guys, remember that if this is the kind of content that you like to watch, hit the like, subscribe to the channel, enable that notification bell so you get notified every time we put out a new video. And remember that there are 2 things that you can do best to help this channel. Number 1, watch this video until the very end. And number 2, before you go anywhere, leave a comment down below. I really appreciate it. Okay, so let's have a look at the heat map. We can see that it's quite divided at the moment. We have some humble moves on top market caps. We have Binance coin having some cool down. In the past days, it was looking pretty bullish, but we could say that the vast majority of the alts are in red. I have to say, the coin dominance was looking also pretty bullish, almost ready to do the next major higher high. And if that happened, if there is a major move on Bitcoin, it's going to punish the altcoins, and that could be the result of an ETF approval, which might mean that all the cash will go into Bitcoin and people will start turning their heads away from alts, at least until Bitcoin finds the next level to cool down, which could be maybe above 50, or if there is a rejection of the ETF or a delay, it might be below 40. The last time we were using the Big Whale Explorer, which is an on-chain data that is looking into the amount of large whales depositing and withdrawing exchanges and out of exchanges as an indication of whether they are selling or buying. And the last time we have a peak above 1 was around here. That was the fake out at almost 46k. It dropped straight to almost 40k. Currently is doing a higher high, very humble. We could call it a double top there. Very different to these stages where we had 1 and then drop and then pump and drop, constantly doing higher highs or very, very strong pushes to the upside. Currently, it seems very humble, just slightly above the 1. So yes, there's still more large whales depositing, which is slightly bearish, but not as bearish as it was in this period where there was lots of profit taking from large whales. We've been looking at this chart for almost 2 years, but I haven't brought it to the channel for quite a while. And we can see that the pattern has been playing out really cool, showing that there was 1 attempt here, a second attempt there, and a breakout. Currently, it seems to be doing a retest here, which might indicate a potential next move projecting to the upside coming this way. Of course, breaking below this yellow line could spell some delay on those plans. I'm not saying necessarily going back to 20, but this breaking there could perfectly take us back for that sweet retest of the 30Ks that many investors are hoping for. All right, so let's go into RSI, because RSI is been giving us amazing entries. If you don't believe me, have a look at my Twitter. The handle is Trading Parrot, and you're gonna find one after other how the RSI RSI 4-hour has been giving us the best entries and exits, both for longs and shorts. And I'm gonna tell you my take on what's going on the 4-hour, because there's something very sneaky about this whole pattern that we see on the screen currently. Let's put it in full screen so you can fully see what I'm trying to explain. Normally, what I expect from the RSI, particularly in this case that is a long extended period from December until now, first you have a bullish move to the upside. In this case, we made it to RSI almost 86, and then there was a massive dump here on the RSI, right? So that sets that bottom. Then we have a dead cat bounce here. We call that dead cat bounce. We say we're going to have another push here. From here, we are doing higher highs and we start getting bullish divergences. And we are hoping for a break of this downward sloping resistance, right? So we have the dotted yellow line there as a resistance. Eventually we break it. We call that on Twitter, and this push to an RSI of 80, slightly lower than the 86. After this, to be honest, my expectation will be typically to say that this can either do some higher highs here, or it could come and retest the trend line. In this particular case, we did neither of those. Investors have an absolute nightmare here because they were saying that there was a rejection on the ETF approval that spelled panic in the public, and they sold so strong that we actually came back below the prior level of resistance. You can see here that we are below the dotted line, and from here people started saying, no, it was just bullshit, we still don't know if it's approved or not, and that brought the RSI back above the trend line. So what is now doing? Well, it's retesting the trend line as it was supposed to be doing, but because the panic was so strong, this whole thing looks like it destroyed the pattern, at least on the 4-hour time frame. And what I would like to see is now a retest here, then we have a second retest, and then a push to the level of 70 RSI. That will be the most typical outcome for the RSI after a move like this. But I still feel uncomfortable about this move here because it's kind of destroying the full pattern. But hold on the horses, because we're going to look now into the daily RSI and remember in your mind this pattern of the 4-hour, because we're going to see it more clean in the daily, and it's going to reveal that actually hasn't been affected by this move. Now, before we go to the daily RSI, let's have a look at what is a level of 70 in the price. So for that, we're going to use, as usual, the reverse RSI, and we're going to put a level in green of 70. We're going to enable it, and for a bottom, we're going to call this bottom potentially at around 33. If we extend this line here, we could say that potentially at 35 there could be a bounce if we break below again. Of course, nothing is guaranteed, but I play with probabilities. So enabling now the reverse RSI, you can see that if we get to a 70, that's going to bring us to 45.7. So that is if we play out with holding this support and going to the RSI 70. If we break to an RSI 35, we could go to 42.4K. That will be if we respect this level of support that we've been building from the 12th of December. So now let's go to the daily RSI, and we can see that there is the same pattern that we saw on the 4-hour RSI, but obviously much more clean. We have less zigzag movements. We have a breakout here, bearish divergence, double top, coming back here, retesting, and all these hidden bullish divergences here calling for a continuation to the upside. Now, if you look at this line here, these are multiple days. This is 1, 2, 3, 4, 5 days. And those 5 days, the RSI remains at around 57, not going anywhere. And that's as a result of all these candles of indecision. These candles that have a very small body, and then you have wick to the upside and downside for 4 consecutive days, are just telling us that the vast majority of investors don't know whether they should be going in one direction or in another, but that's also calling for a very high open interest and a massive impulsive move as well. And why is that? Because when people get bored, they start increasing the amount of leverage and they start calling for breakouts. They start putting stop losses very tight to this area here, expecting a move in the direction they want. Unfortunately, the price most of the time doesn't just go in a single direction, but it usually liquidates everybody before picking the actual direction it wants to go. So on the daily, we could have another retest here and a push to the upside if we are bullish, or eventually this could do a higher high and reach of 70. I'm calling 70 because usually when you hit an 80 and before you hit 87, so this is kind of a drop in the momentum of the long term. We're talking about the momentum that we had in October, then the highest momentum in December, and then the highest momentum that we might get in January, February, might be around the 70. Of course, that can change, but we are talking about probabilities. This is usually what happens. On the weekly, the RSI has been building this beautiful pattern here that is definitely been calling for a retest of this level. This is around 55 on the weekly RSI, and it will be really healthy to come and retest it. If you wonder what is that level in terms of price, the 55 is located around 37.5k. Now, if we broke into a very structured, say we lose the 55 and we came back down to the levels of 30 in the weekly, maybe because of our rejection of ETF, we have to keep that scenario on the table as well. That will take us to around 30, 31 on RSI, and that currently coincides with the 19.1k. Of course, we are going to need a lot of bearishness to be able to get there, but remember, in the previous cycle, we were going up here, we lost this level, and we started coming down all the way to 32 in the RSI. Of course, that was because of COVID, but let's keep this in the future, and if it plays out, we can talk again about this pattern. So what is the major risk currently in the market? Well, for that, we need to go no further than the open interest. We have 3 time frames here and 3 representations of how much open interest we have and how many longs and shorts at the same time. We have a very high level of open interest on the 4-hour, and on 3 time frames, we can see that is dominated by longs. So that means that if there is a small incentive to dump Bitcoin, there will be lots of cascade liquidations to the downside, because on all time frames currently is dominated by longs. So if they pull the rug and some are still there, that creates that cascade of liquidation. So be careful with the current risk in the market. Let's go back again into on-chain data, NVT, which is network value transaction. We can see that we are revisiting the same level that we had visited 3 times in the past year. This level here, that was the bottom of the market. This level here, that was where we resumed from 20 and we exploded to 30 in a few days. We have this level here, that was the beginning of this whole move to almost 46, starting from around 25. So these levels of network value transaction are usually very bullish. Now, remember one thing, that yes, this can still drop slightly lower. We have visited 27 on the NVT, but we have made it to almost 18 in the past time. So there can be still a dump here. For example, if the NVT did something like this, and then you see a wick down there. So the fact that here on the price, we still don't see the dump that comes with an area like this. For example, here there is a dump, here there is a dump, and here there is a dump. And that dump in conjunction with an MVT in very low is a very great entry. So what I'm saying is that we are entering into the zone that NVT is very green. So that in combination with a big move to the downside has proven to be really great entry. So let's keep an eye on that, and let's connect it a little bit with where is that liquidity. If we go down, we're gonna go as low until we get enough liquidity from those longs that are currently overexposing themselves with high levels of open interest. So we have some levels here of liquidity starting from 40K to around 38K. But then from 32, a massive level here of liquidity until 30K. So if there was a dump, if there was a massive disappointment from Bitcoin investors and the whales continue to dump on us, which is currently what they're doing mostly, so the people depositing are winning against the large whales withdrawing, then we could potentially visit some of these levels. So keep a note of all of them. And to end the video, I'm gonna give you this gift chart that I really love. So we've been using this. You can go back in time in my channel and you're gonna find how many times I featured this custom-made Fibonacci that I started seeing from around April last year. I think that was the time where I started noticing that all the stops are coinciding and we were able to find perfect levels of support using this particular Fibonacci. So for example, when we have this explosive move, we were saying there should be some resistance around here, and there was, but if there was breakout, we can continue to the next level. So we have explosive move here, 2 and 3, and now we're doing the third one right there, and that's where we are currently. So if there is an approval of ETF, potentially we can stick our heads for the first time above the white line. And I don't even have a next line to put here. I will have to prepare the chart maybe for the next video in case we push thanks to this. But if there was rejection as well, we can look at the rejections of those levels. Where do we go after a rejection? In here, prior to FTX, we have a rejection of the white line and we kept to red line. Red line here is around 40K. So if that becomes resistance, we can go to the gray line, because the gray line is kind of the most disastrous one that we have in the past year. The gray line will take us to around 34K, depending on how long it takes to get there. Like it could be 37, it could be 33. And the last two levels that we kind of hold in the most bearish times during this year, apart from the FTX, is the blue line. We have blue line here at 20, we have blue line here at 25, and we held this area for a long time. If we go to blue level, that will be around 37, and depending on whether it's a dump or it's a slow grind to the downside, it could be 37 to 36K. Guys, I'm currently hosting this new event to unlock up to 60,000 in rewards. All you have to do is open the video and scroll to the description. You're gonna find this link here. That's gonna take you to this page. You're gonna need a new account on OKX and hit the join button here. The more you deposit, the more you trade, the more rewards you're going to get. Guys, thanks so much for watching the video. Remember to leave a comment down below and hit the like, and I'll see you in the next one. Bye bye.